Hey, so Brian, are we going to introduce ourselves first?
No,
No,
we're not going to do that. No, everybody knows who we are.
All right. Hey, Brian. So something we just rolled out with one of our investors. Everyone's talking credit scores. We're normally 90%, 95% of lenders, we use the FICO model. And now we're rolling out a Vantage model. Can you share the differences, the advantages, if there's any disadvantages, how it opens up more opportunities for our buyers?
Yeah, so guys, this is huge. It is changing massive things with customers right now. So, for instance, in the old days, we would do Fannie Mae, Freddie Mac, FHA, VA, and one of the things that they always wanted, no ifs, ands, or buts, was your credit scores. And we take out the high score, throw it away, take out the low score and throw it away, and then you have the score in the middle, and that middle could be 620, 640, 650, 60, whatever. They just rolled out a new credit bureau service called Vantage. And what Vantage does, and we now pull it at the exact same time. So 90% of the companies out there do not have this. They've not adopted this technology. They've not adopted and said that this is a credible credit scoring company, and they're not even using it. But we've had example after example after example where we run them both simultaneously. So we're getting FICO scores and then Vantage scores. And then we, the loan officer, picks what's going to be best for you, the customer. So we just had one that just closed. The FICO scores were in that 660 range. The Vantage scores were in the 702 range. So we went from 660 to 702. And what does that do? That gives us stronger approval.
Better pricing.
Better interest rate,
lower MI,
lower mortgage insurance. So your mortgage insurance with the FICO with that liar score, because when you go with the mortgage insurance, it's all based off of when you go conventional loan, it's all based off of what your credit score is, the bucket that you're in. If you go from a 660 bucket to a 700 bucket, you're jumping 2 buckets to get all the way up to the 700. Someone's credit score could be giving them $190 a month in MI, and now it's only $103 a month because we're using that higher credit score.
Which is awesome. That's awesome.
It's unbelievable. So again, 90% of the companies have not even adopted this yet.
They haven't.
We released it just last month. And it's changing things for customers. It's getting them lower interest rates, and it's getting them way better, lower MI.
You know what I found? You know what I found interesting is, when we have customers come to us and like, oh, Tim, your scores are this, and my Credit Karma is this. I'd be like, well, don't listen to Credit Karma. Well, Credit Karma uses the Vantage model.
It does.
So that's right there. So sometimes you can say, okay, Credit Karma. Now we can use Vantage.
And we'll look at Vantage, and it can still be off, because a lot of times Credit Karma could be off by 80 points. I've seen it go both ways. Oh, yeah, I think we're on a 620, and it comes back at 720. Or they think they're at 780, and it comes back at 690. So a lot of the Credit Karma stuff is recognizing charges on the go on a daily basis. You can look at it and see, what is it today? What is it today? You made a large payment, and it's recognized there, but it hasn't been pulled. When we pull, it's a snapshot of time. So if you're going to pay off a bunch of debts, the time to pay off those debts would really be like the 20th of the month, so they can report the new accurate stuff for the following month. And that'll mostly affect your scores in a positive way. Don't close the accounts, just pay them down.
No, that's great. So Vantage is just one score.
Vantage is 3 scores.
Oh, it is still 3. Okay.
Yeah, it gives you 3 scores. It's just not Equifax, TransUnion, Experian. F those guys, we're going here. But if FICO scores, Equifax, TransUnion, Experian, if their scores are higher,
yep,
then we'll use theirs. But awesome. Now it's saying which path is going to be the least amount, and we're crushing the competition with it, just crushing it, because they're like, oh, we got you at a 629. I'm like, yeah, we're at a 705. Go F yourself.
So that's interesting. So do you, and I don't know if you even know this answer, but what do you think the different models are? Like, where if there is a variance, what does Vantage or FICO look at that maybe the other one doesn't? Or is it just, why is there so much variance?
It's just that they have a scoring model. So the reason why your 3 credit scores aren't the same with FICO, okay, is Equifax, TransUnion, and Experian each have their own different model that will score you. Vantage just created their own algorithm in their own model, and it's looking at things differently. And it's benefiting the customer in some cases. If you're at a 640 and we have a 705, well, yeah, we want the 705.
Absolutely.
You want the 705.
Right. Absolutely.
So it makes no difference to us We just want you to have the best rate and crush our competition. I'm telling you, we're crushing it. They're like, oh, we're at 622. Yeah, well, our Vantage score is 705. F those guys. Let's go. Full speed ahead.
Absolutely, man. That's going to be a huge advantage for
So
us.
call us, call our team. That's why we're here. And we're starting to release it on the self-employed programs, like a bank statement program, on the 1099 program. They're starting to release it on DSCR loans. So we're like one of the only investors that has this right now.
That's awesome. Call us.
Talk to you soon.